Markets rallied prior to Thanksgiving. Will it continue this week? That's coming up on 3 Minutes on Markets and Money. With a holiday shortened week, the markets were able to rally nicely as the inmates were running the asylum. Very light volume last week. Markets closed on Thursday, only open half a day on Friday. On Wednesday, stocks got a lift from the release of the FOMC minutes, which suggested that the Fed will start reducing the pace of their interest rate hikes moving into next year. However, now that we get back into the next full week of trading, heading into December, will the markets continue higher? Well, there's certainly some hope here. First of all, we still have this very defined rally in the markets here at this point, just this very nice uptrend that's been going on right now. Markets came down, retested support, bounced off that nicely. We're currently running right into the 200-day moving average. This is going to be kind of a key resistance level at this point, and that's going to continue to kind of keep pressure on prices, at least near term. Now, importantly, too, when we take a look at the markets, we're in a very defined downtrend, obviously. Ever since the beginning of this year, from peak to peak to peak, markets have rallied up to this level, failed, and then tested previous lows. We're going to be talking about this again probably in the next few days as the markets approach this 200-day moving average, which is basically where that trend line now intersects for the most part. Outside of that, also, markets are getting overbought here. On our MACD buy signal, that signal is getting fairly extended, fairly overbought. Relative strength index is starting to push up into overbought territory as well. So upside here may be a little bit limited without some form of a correctional process here over the next week or two to set the markets up for that year-end kind of Santa Claus rebalancing portfolio window dressing period that we tend to see at the end of the year. However, on a bullish front, as we talk about this, the 20-day moving average has now crossed above the 50-day moving average, as well as approaching the 100-day moving average now as well. So again, lots of bullish support coming in here, at least on a short-term basis. This will give the markets a little bit of support to the downside. Now, as we enter into the beginning of next year, January has the most inflows of any month of the year. And in fact, there's more inflows into the stock market at the beginning of January than every other month combined. This is because, think about 529 contributions, 401k plan contributions matching, beginning of the year contributions to IRAs, all those type of things. Typically tends to be a lot of money coming into the markets in January. That typically tends to give the markets a little bit of lift. So if the markets can currently get above this resistance at the 200-day moving average, that does give the markets the ability to rally a bit more. Now, we've seen breaks above the 200-day moving average before that failed. We saw that back earlier this year. So just because we get above the 200-day moving average in the short term doesn't mean it's an all clear signal, but it's certainly confirming this bullish improvement that we are seeing in the market. So, again, the question is the bottom of the market in? It's certainly hard to make that case right now. But again, we'll be watching this trade over the next couple of weeks. But look for a little bit of profit taking here. That'll give you an opportunity to add some exposure here for a trading opportunity if you want. But again, if you're a longer term investor, I would certainly be using this area right now. Reduce risk, rebalance portfolios, and then we can kind of get through the next period and see what to do next. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.